Welcome to the Roadmap Podcast. My name is Drew Creekmur, and I'm here with John Creekmur, founder and senior wealth advisors of Creekmur Wealth Advisors. And today, this is our first episode of the Roadmap Podcast. We're really excited about it and just so excited to have each and every one of you join us as we begin this endeavor. And so, John, kind of give everyone a picture of what we're going to be discussing on the podcast. What is the purpose of this, and why are we taking this step now?
Yeah, I'll tell you what, Drew, we, first of all, excited to be rolling this podcast out for everyone. We have a lot of people all around the country we interact with, and, we have over 1,000 clients, and we're in a number of different states. Even some of our clients live outside of the U.S., and always trying to find ways to connect, find ways to learn, find ways to make great decisions. We get a lot of phone calls in. We have a lot of emails coming in as far as the folks that are asking questions. And what about this? What about that? How does this impact our portfolios? Or how this tax law change, and how in the world make a good decision on that? We thought, this could be a great way for every single week for us to get out most relevant information, answer questions that people might have, and try to get stuff out in a pretty timely fashion so that everyone can make some good decisions as far as how to improve their financial decision making, how to accomplish goals, and really how to kind of walk through just that roadmap of life, and to say, hey, we are right here at this spot right now. Here's our situation. Here are the incredible goals we want to accomplish. And here's a couple good ways to make some decisions on the entire roadmap you're walking through.
Yeah, absolutely. And, it's interesting with where we're at currently in today's world, some of the current events that we have going on. And I think the one that we've probably had beat into the ground a little bit and it's on the forefront of everyone's brain is trade wars. And how is it impacting our investments, our financial plan? And for us, it's been fascinating to watch over the last number of years since President Trump has been elected, the true impact. We've seen the economy grow in the first quarter of 2019, up 3.2%. Our jobless rate is at a 50-year low here in April at 3.6%. So the economy on the surface looks to be pretty strong, but recent events have led us to start seeing some cracks in the economy that are being attributed to the trade war. And so it's definitely a fascinating time. I think the first one that we were actually talking about today, John, was the farmers here in the United States who are the base for President Trump, some of the impacts that they're seeing in their daily business.
It's interesting, Drew. We have so many clients that are in some way tied to the farming industry, and so agricultural business. And so whether it be farmers themselves, or else they're suppliers to the farmers, or else they sell equipment to farmers, or they even work for John Deere, or they work for Caterpillar, a couple large implement dealers there, companies, and so greatly impacted by that. And so, we see it all the time. I know this year has been crazy as far as weather, Drew. It seems like we have a winter that never wants to end, right? I know personally, we have a small little hobby farm that we have on our property, and we actually just got our seed in the ground yesterday. Here we are in the first, the middle of May. We just got that in the ground. So, the farmers have a lot of stuff they're working through. But right now, one of the big ones is, boy, this trade issue we have going on right now, and the whole tariff situation we have with China is impacting them as far as in profitability inside their farms. And, even with the pricing, as far as with corn and beans, we're sitting at some pretty low pricing. Do we hold on? Do we sell our stuff out of the field? Do we simply sit there and put it on deposit and hold it inside elevators? What do we do? And so it has a huge impact both on pricing, but then also as far as the supplier companies.
Right.
What's the impact going to be to Caterpillar? Impact going to be to John Deere? And so that affects even our investment decisions.
Right. On the investment side of things, we can't obviously control what the people in the Chinese government or the people in the United States government are going to do, but we can try to reduce risk where it's prudent to do so. And so we're seeing broad impacts. And, one of the areas outside of farming that we're seeing an impact is on the retail side of things. So let's use shoe wear, for example. Currently, just came out yesterday that U.S. tariffs have increased the prices of shoes up to 11.3% per pair of shoe. And, on the surface, it doesn't seem like a big deal. But with how much we import from China, that is a massive impact to the bottom line of the U.S. economy.
It's funny, too. It's not just the impact to the U.S. economy, but it's the personal impact. I mean, reality is, I think that in our household, we have a couple of shoe horses that, not horseshoes, but we have a number of people in our family that love to own shoes. And so always out there looking at different shoes, whether it be tennis shoes from Nike, interesting stats from them as far as on how much they've had to increase the retail price of the shoes, but really any level of shoe. And so it's actually filtering down to the average everyday consumer. And so the trade war, it's not just these two countries kind of duking it out on that top level.
Right.
The president of China came out yesterday and just said that we had started the long road, and this is now a continuation of the long road. And
Right.
so he's actually talking about, hey, we're digging our heels in the ground, and we're not going to cave on any of these demands. And so I think it's been with us for a while. And the question is not what's happened in the past, but as this goes on and we see higher prices that ultimately are really borne by the consumer, how is that going to impact the economy long term? And also, what impact does that have on actual portfolio performance? And then actually, it's not so much your rate of return that you get, but how does that play out as far as in you achieving your goals? Whether it's a goal to buy a new car, it's a goal to, retire at some point in time when you want to, that the tariffs will end up having an impact on that in the real world.
Right. And I mean, when we talk about achieving goals, one of the biggest functions of being able to achieve your goal is how much you save. And if we're paying more for shoes or cars or the food that we need to eat every single day, at the end of the day, everyday Americans are actually not going to be able to save as much to achieve their goals. And that's where we're going to start seeing in our line of work and in dealing with our clients, we might need to make some adjustments there. Absolutely.
For sure. That's
Absolutely.
why, Drew, is why it's so important to make sure we're always kind of getting together and reviewing what the goals are, how the goals change, how's your situation changed, and even looking at your cash flow and your budgeting, and just to make sure that you have a good understanding of how much available as far as for saving to realizing goals.
Right. Right. It's so simple, but a lot of times it definitely helps to automate things. And, it's interesting as we look to the future a little bit, we've heard a lot of talk with an autonomous future. Now, what does that look like? Are we going to have flying taxis in the sky, or are we just going to have more robot workers doing jobs in factories and shipping? It's kind of an interesting topic. And as we look to manage client portfolios, it's something that we have to factor in to that decision-making process for us. And I know we were actually just talking about before we started recording Tesla, just kind of the wacky stock fluctuations we're seeing there with a product that as a consumer product is truly amazing and very, very innovative for the everyday American. And I just find it so fascinating, some of the calls, some of the bearish calls we've seen come out in the last week or so.
It's interesting, Drew, because we talk about autonomous and really that it's a self-driving. It's not just a car. It could be a robotic. It could be a drone that's flying, but something where a computer has the ability to actually take something from one location to another. And Amazon just had out this morning as an article that came out. The question was, could this robot be delivering packages to your door soon? So they actually have created a robot where the information gets put into the system of where to deliver certain packages, and the robot's delivering instead of having a human actually drive a truck to your house to drop off whatever the package is. And we see things about cars and cars driving themselves. And I remember way back when I was watching the Jetsons in the late 1970s, and you see the cars driving themselves. Well, we're getting closer and closer to that. And there's a small company down in Kentucky that's actually working on a contract with the U.S. government as far as for the postal system. They have trucks that would actually drive themselves to different locations to deliver mail. And so I think we're going to continue to see that area developing. The big question really is not, is it going to be there, but who are the winners and who are the losers going to be?
Right. Right. And that's so hard to predict. Tesla was an early innovator in the self-driving car space, but are they truly going to be the one that ends up winning? And so when we look at it from an investment standpoint, we aren't buying Tesla stock. We're looking for the components that Tesla uses that are broadly adaptable across the industry because investing in Tesla stock, that's a huge risk, right? And so how do we minimize that risk in that portfolio? That's a definite question we look at.
It's a huge question, Drew, really. And so when we're looking at different investments to make, I think we need to recognize large trends. And so we can see a trend as far as on autonomous vehicles, or we could have a trend as far as on, let's just say, something else like high-end gaming or high-speed computer processors. Well, the reality is those are the components that are needed to make all these futuristic things happen. So it may not be buying one specific company, but just recognizing those trends, trying to have our mind thinking 5 years, 10 years, 20 years down the road to say what can be there and what components are there actually that's going to be needed in those tools.
Right. And that's kind of the basis behind our core and satellite management philosophy. We all have heard how important indexing is, and it really is. And it does need to be a part of your portfolio to keep costs low in your portfolio for a large portion of your assets. But if you're able to track those trends that John's talking about, you're actually able to provide potential for outperformance in your portfolio. And so for us, the autonomous is definitely a feature we're watching. I think currently we have cloud computing is one of the trends that we actually have invested in our portfolios. And another trend that we currently have is mobile payments, which I find to be a fascinating topic to me as a millennial who I personally never carry cash anywhere, which is hilarious because I'm sure, John, whenever you were my age, you probably went everywhere with a wallet full of cash, right?
It's funny, Drew. We're always told, make sure you have a quarter in your wallet. So in case you get lost and need to use the payphone, you always have a quarter there. And we always need to carry $100 as far as in our wallet in case we needed to use it. I was actually driving up in Chicago yesterday, heading over to an analytics meeting, and learned a lot there, and from one of our vendor providers there. But I was going through the tolls, and I thought I actually had to use cash to pay to get through the tolls. Find is like I've resorted to having no cash, and so whenever Stacey and I were over in Italy, about a month ago on vacation, had a great time with some dear friends of ours, and really enjoyed it. But I was reminded again, I still needed to carry some euros because some people do not take
Right.
mobile payments. But it's just kind of interesting, and as far as how we're continuing to transition, and so anymore, there really is very little that we need to have cash for. We're
Right.
becoming a cashless society. And so, we think about it, well, what does that really mean?
Right.
So you think about, credit cards, Visa, MasterCard, but not just that, but it's how do we network and integrate different methods of payment? And Drew, what are some of the other ways as far as people use mobile pay?
Right. I mean, people are now using their phone just to go up and swipe just their phone with their credit card information to pay for their coffee every day. Square, PayPal, they're on the leading edge of peer-to-peer lending where you send people money just using an app on your phone. And Square actually came out with a report yesterday that was, to me, very fascinating. That showed that Americans are using mobile payments, so credit card or phone or PayPal or whatever you would use in that space for 75% of purchases over $50. And since 2015, we've actually seen a 9% decrease in people using cash to pay for purchases under $20.
Yeah.
And so we're still definitely going to have cash. We're going to be a cash-based society, but we're starting to see the trend accelerate to people using mobile payments in their everyday life for just buying a cup of coffee or, picking up a pair of pants. That's stuff where the consumer is really starting to make that transition. And so as portfolio managers, that's a trend that we're watching. We think that's a long-term trend. We aren't thinking this is a short-term fluctuation where we're going to try to make a quick buck. We're truly trying to be an investor in that trend in our everyday portfolios.
Drew, it's so critical, and also it's interesting. We even at our church, we're kind of going through the process of the larger church of taking mobile pay whenever people would want to give as far as for a not-for-profit. And interesting, even with studies on that, they have kind of looked through the last couple of years, churches across the United States, regardless of background, denomination, whatever it may be, whenever they start to offer mobile pay, they see between a 7% and a 12% increase in overall giving. And so as a society, we're continuing to move there. So it's about identifying those societal trends that they're going to be there and impactful, really not just for the next year or the next 2 years or a month or 3 months, but really what are these trend lines that are going to be with us for long periods of time, 3 years, 5 years, 10 years, 25 years, and say, you may not, the winners and losers today may not be the winners and losers 10 years from now. And a company that's around today, which is interesting, we saw it way back in the late 1990s, right, with the internet explosion. And so a lot of the companies that were the leaders and thought then, they're no longer in existence.
Right.
And so that's about finding trends and saying, okay, how do we work within those trends in a way which we have a diversified portfolio that we can go through, and how do we invest and take advantage of it?
Right. Right. And, I really like that core and satellite philosophy for that type of investing where you really need to have your basic investments to help reduce your risk, but try to capitalize on those possible trends on a day-to-day basis. And, whenever we're managing portfolios, one of the biggest questions I know I've been getting recently with my clients, I know you hear all the time, John, is when is the big one coming? When is the recession coming? When's the market pull down going to come? And what are you guys doing to set my money up and to be the best possible position possible there?
Yeah, I'll tell you, you hear that all the time, right? It's like everyone wants to try to be a prognosticator and try to guess. And there's some people out there that you read all the time online is a great place where you find these articles that always talk about, the next Great Depression is coming,
Right.
and a recession is going to hit. The market's going to drop 38%. And so 2008 really is the forefront of a lot of people's minds, even though it's 11 years ago.
Right.
And so because of that, they have a tendency to react whenever we see the market drop, 2-3%. I just think in history, we need to recognize, hey, the market typically pulls back a number of times throughout the year by 5% or more off a high. It pulls back, once every year, about 10% off a high. That pulls off about every 39 months or so. We see a pullback of 20% or more.
Right.
We've not had really one of those severe pullbacks. Goodness, what Drew says, 11 years now.
Right. Well,
And
and
so,
even, at the end of 2018 here, we had a pretty steep drop in the market, but it wasn't a traditional bear market, which, as you mentioned, really happens pretty regularly. But they typically last for about 3.5 years on average. And so what we had here at the end of 2018, that's not normal. And so we've kind of gotten used to the smooth sailing that we've had in markets for the last, 11 years or so.
yeah, for sure. And so whenever we always try to encourage everyone, let's not look and try to time the market. Let's
Right.
try to find long-term trends that are going to be in there. They're going to fluctuate up and down, but you really have to set your investments based upon, what your goal objectives are. And
Right.
so if you have a time horizon of 3 years or 5 years, well, then obviously you would be a lot more conservative
Right.
as far as in your portfolios. If you have a time frame that maybe you're not going to touch the money for 10, 15, 20 years out, well, then you'd say we can take a little more risk in that generally. But the first step really is understanding your goals. And then from there, you can set your risk tolerance. So, Drew, a financial goal is what? It has to have a time frame
Right.
tied to it, when I'm going to need the money. But
Right.
also then it has to have a dollar amount tied to it, how much we're going to need to accomplish the goal.
Yeah.
So once people define that, it's pretty easy to have the conversation of how much risk we need to achieve that goal. Or if you're saying, hey, I'm pretty close to retirement, I'm sitting there, or maybe I'm already retired. Well, that's a whole different discussion. Then the conversation really needs to begin and end with what does your income need to be, and then how are we going to achieve that income need, regardless of the markets and what they do.
Right. Absolutely. And it's important to have that proper perspective, even in times of fluctuations in the market, that, most people, they have a very long-term outlook for whatever that goal may be. There's very few goals where a short-term fluctuation in the market should cause you to panic. And so it's always good to keep that perspective and come back to the basic financial plan that you need to have developed. And that's where we really love working with our clients to help them build that financial plan, to give them the perspective that is incredibly necessary to have long-term financial success.
Yeah, Drew, we're getting ready to wind things down here. I was thinking about coming up next week, a couple interesting topics that I know people have kind of brought up or seen in the news. I mean, one is, the federal government's thinking about changing the required minimum
Right.
distribution age from 70.5 to 75. Maybe we'll have some clarity on that, some clarity as far as some budget items. And even the big one for me is, are we going to see the Milwaukee Bucks making it into the NBA Finals? And so that series is tied 2-2 right now. But the big question is, are we going to see that? Maybe we can start dissecting that next week. If
Yeah.
it happens, Golden State, are we going to see the Bucks win or whatever? But
Say, I think that'll be the upset of the year if the Bucks actually, or the Raptors, whoever it is, actually beats the Warriors. Since it's now 5 years in a row since they've made it to the finals, so
yeah,
maybe we'll be able to give our pick or hot take on that front next week whenever we reconvene. We just want to thank all of you for taking the time to listen to our first episode of the Roadmap Podcast, and we look forward to sitting down and chatting with you every single week from here on out. So once again, thank you for your time. Have a great week, guys.